Okay, we're back. So the last video we talked about some of the distribution summary statistics, and we looked a little bit at the distribution histogram, and we thought it would be a perfect time to go back to that study, those series of studies, and talk a little bit more about how we use that information to improve our trade results. So Barry, we want to take over where we left off?
Okay, TJ. The whole concept of trade distribution certainly it's complex. There's no question about it, but it provides some significant insight into the trading system and the personality of that trading system and how stable it is and how reliable it is. So it is quite useful to look at it, and most traders have never actually looked at what their trade distribution looks like. A lot of them think that just because they have some winners and they have some losers, that they have a random distribution and it's going to look like a bell curve, or what we call a normal or Gaussian distribution. But it's interesting, not all trade plans will give you a normal distribution. So why don't we switch over to the trade distribution tab? That's the fourth tab on the bottom of the sheets. It's the orange tab, so I'm going to click that. Okay, so here we are on the trade distributions tab. Now again, as I pointed out, I'm sure every one of you can look at that very first chart there, which is a chart of all the trades between the start and the end date that was specified on the data tab. So you can look at that and you, I'm sure, can all tell me that's not a normal distribution. Doesn't look like a bell curve. And the reason is because we can see that it's got a peak on the left where the negative trades are, a peak on the right where the positive trades are, and it's got this huge peak in the middle. So we're going to delve into that a little bit and try to figure out what's going on with this trade system. Now first, I just want to make sure everybody understands the graph. There's actually 4 graphs on this tab, and they're all similar, what they provide. Now this first graph again is all trades between the start and the end date. Now the horizontal axis is the number of points, as it says right up here. Let me get my highlighter. As it says right up here on the title, this is the trade log distributions in points, not dollars. Okay, so the horizontal axis is the number of points that the trades returned. You can see there's towards the left there's a 0. That means the trade returned between 0 and 4, which is the number to the right, 0 and 4 points. So this big, tall, not the tallest, the second tallest bar provided between 0 and 4. Well, how many trades did between 0 and 4 points return? Well, that's on the left axis. So that axis is between 0 and 70. So if we go up to the top of that bar, we can then move over to the left and see that that would be about 55 trades that had between 0 and 4 points. Now if we take a quick look on the bar on the right, which is the tallest bar, that's between 4 and 8 points. Remember, it's between 4 and then the number to the right. So it's between 4 and 8 point return. If we go up to the top of that bar, I'll slide the little highlighter to the top, we see that that top is a little over 60. So maybe 62 trades or something ended up getting a return between 4 and 8 points. Now, also, while we're there, we can see that there's some percentages. Now, on the right-hand axis, we can see the percentages. So every one of these bars, or every one of these bars is a group of trades that fell within some number of points. So that's why it's called a frequency histogram. So we can see that approximately 8.3% of all trades fell between 0 and 4 points if we look at the percentage on the top of the bar. We can see that about 8.5% of all trades fell between 4 and 8 points. So that's how you read that graph, okay? Again, the column on the left is the number of trades that fell within the bin or the point range. Okay, great. So once again, let's take a look at that. We see we have something that looks kind of like a bell curve on the left where the negative trades are, and we see something that looks kind of like a bell curve. There's a big peak in the middle on the right where the positive trades are, but we see this strange peak in the center where if we look down at the horizontal axis, again, we see those are all positive trades. So it's kind of interesting that you can look at this and you can tell what kind of a trading system this really is. First of all, it's not normally distributed. You can also see that there's some trades that tail off to the right, or very positive trades. In fact, there's one right over here at 152 points. Then there's a couple over here around 100 points. So we can see that there's a couple really big winners. So what does that tell us about the trading system? TJ, I'm going to ask you about this trading system here. How come there's a bunch of big winners and there's no big losers?
Okay, well that's actually an excellent question. A couple things. One is that the philosophy of this trade system is to try to put us in a position where we have no risk as quickly as possible. So as the trade progresses closer and closer towards certain goals, certain money management levels along the way, I'm aggressively moving my stop to either a break-even or a very small profit. I'm trying to lock in anywhere from 1 to 3 ticks to ensure that I'm covering the cost of my commission. So if that trade turns against me, it's going to stop me out at a small loss. So the goal of the system isn't necessarily to hit its full target. The goal of the system is to put us into a risk-free trade. And so as a result, we're giving back, or we're getting stopped out as the price falls back down and maybe takes us out after we've locked in only a few ticks of profit. And now some of those trades have gone on to become bigger losses. And so those trades have been very positive for us because instead of a bigger loss, we end up getting out, with a tick or 2 or 3 of profit. Now, it's true, nothing's perfect. Some of those trades did turn around and actually go all the way to full target. And again, there's always a trade-off. With every decision you make in trading, there's a give and take. So I'm willing to give up some of those trades that go to full target if it means I'm going to be putting myself in a risk-free position more often. You see, so in a way, it's the philosophy of the system that's causing those 2 long bars right there between 0 and 8 points. Well, one thing, Barry, if you could hold that question for a second, the wins and losses are not evenly distributed. I didn't think you meant to say that, but I wanted just to be clear. Obviously, this system's winning nearly 70% of the time. So, those losing trades only represent about 30% of all the trades. Yeah.
Yeah.
And
right
partly because of those 2 tall bars in the middle. That's really added to the winning percentage.
Yep, I understand that. Now let me ask you another quick question then. Now that you can actually see that this is how your trades, this is the personality of your system, and you can see that it's definitely biased to the long side. So you get, not the long side, but the winning side. It's biased to the winning side.
Biased to the winning side, yes.
Yeah.
It's a winning edge.
It's got a winning edge. It's got a positive expectancy. It's the average win, which is represented by this tall bar right here. The average win is greater than, that's about 24 to 28 points. But if you factor in all these winners, then the average win is greater than the average loss, which is represented by this tall bar on the loss side. So this is the peak. This bar here, at 24, is the peak, but it isn't actually the average win. The average win is higher than that, okay? And it's being biased or pulled up by a lot of these big winners over here on the right-hand side. But here's my question I want to ask you. Since you can see that there's a bunch of trades between 0 and 8 points, do you think there's something you could do to maybe improve that?
That's a really good question. And I do believe that the answer is maybe. I mean, it does give me a clue as to where I want to look to try to improve the rules of my trade plan. So, remember, the philosophy of the system is not necessarily that the trade has to hit its full target. The philosophy is to put yourself in a risk-free position as quickly as possible. And that's going to be at the expense of some trades that you get stopped out prematurely that end up winning and you're on the sidelines. So maybe you might look at a looser stop. But remember, the trade-off will be you will hit some bigger winners, but you'll also hit bigger losses on some of those trades as a trade-off. And is that better or is that worse? I think you would have to go back to the drawing board and try some different rule sets, run some back tests, and see what the difference is. Maybe it would be more profitable, but your equity curve might be a little bumpier. You might take some bigger drawdowns to get to the higher profit levels. You see, so the answer to your question, I think, is that it does point you in the direction of where you can examine your trade plan and test some new ideas, but the answer is maybe. There's no yes or no whether it would be better or worse that you can just pull off the top of your head. All you can do is use this information to go back to your drawing board and try to improve it by altering your rules and running the back tests and see what flies.